Hello, everyone. Welcome to yet another weekly analysis. Now, I'm going to say a few things. First thing will be this: yeah, it has come to my attention that our subscribers are increasing. For a small channel like this, it's imperative that we subscribe and help others to see our videos. You see what I'm saying to you? It's not about me. It's not about me at all. You see what I'm saying? It's about you lot. You get me? It's about you lot. So let's help others to share from our ideas. You see what I'm saying to you? So notwithstanding, the next I'm going to talk about is the last week's analysis. So we planned the DXY. We talked about the DXY. We talked about reasons why we could continue to be bearish. There's something to you now. It is important to be realistic. I said this again, right? It is very important to be realistic in everything you do in life, most especially with trading. You have to be realistic. You have to adapt. You see what I'm saying to you? The market tells us what to do. We don't suggest to the market what we think should happen. We do not suggest to the market what we feel should happen. The market what tells us what to do. So we have to listen to the market and not to your gut, not to your reasoning or to your emotions. Listen to the facts. Listen to the market, right? Listen to the plan. If you see a break of cotton trend line, the plan says buy, we buy. The plan says sell, we sell. We don't go out. Oh, I don't feel like, oh, I don't feel it. No, you don't have to feel nothing. With the market, you have to be emotionless. You have to have no emotion. You see what I'm saying to you? So moving forward, we're going to start with the DXY again because it's important to refresh our memory, refresh our mind of where we are and where we we what our thought process was in entering this week. Because I remember last week it was very tumultuous. The same I'm saying to you, it was very very erratic. The market was moving very very erratically, and so we have to come to understand what's happening now that the markets have settled down. Now that the markets have settled down, what should we expect? You see what I'm saying to you? Now that we have a clear view, what should we expect? What should we, not expect? And what should we do when we see certain things happen in the market, right? So moving forward, we're going to start with the DXY, right? Because for this week we have but for this week we're trading, for this week we plan not to trading. We've planned the Euro USD, we're planning the GBP So it is very, 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 very important to go to the dollar index, right? So because the dollar index, it took me, just like a month to be able to really, really, really understand the reason behind the DXY. Something so the dollar index is basically the bread and butter of the Euro USD. Whatever the dollar index does, the Euro USD will follow. I take it again, will follow. You see what I'm saying to you? They follow the dollar index, they follow it. The Euro USD, the GPUSD does not lead the way. The dollar index leads the way, right? So moving forward, we have come to understand that we are bearish. Sorry, we have come to understand that we are bullish. Yes. We have to be realistic, we have to be truthful. You have to tell yourself the truth. You have to tell yourself the truth. You have to tell yourself what you see. Don't go on because it has happened to me before where I keep thinking of I keep I know I see, but because I think the next man may have better understanding. I say, all right, right, what you're saying is the right thing. It's what I'm saying to you. Now it's not about being right or wrong. It's about saying what you see. On the monthly time frame, structural wise, we are bullish. Structural wise. Now, on the weekly time frame, which we'll go to in a minute, on the weekly time frame, we are having what a medium term reversal. This is the truth. This is the truth. This is the truth. If you go outside and if you go out and tell a mate, and you're trying to have a conversation with more experienced people, and you tell them the DXY is bullish, they will laugh at you. So you tell them the DXY is bearish, they will laugh at you. The DXY, the dollar index, is bullish on the monthly time frame. This is so until we break this structure right here, we are bullish. Now, notwithstanding, right, on the weekly time frame, we are having a medium term reversal. Now, it is very possible to trade the medium term reversal because why? We are coming from where we are trading off of the higher time frames, off of the highest time frame, in fact. You see what I'm saying to you? We are trading off of the highest time frames, right? We're trading off of the monthly, we're trading off of the weekly. We're not trading off of the 4 hour, we're not trading pullbacks. You see what I'm saying to you? But we are trading the pullbacks from the monthly time frame. So it is very important to know that when you see chart patterns on the weekly time frame, it is going to hold. If you notice, you could see this head and shoulder right here. It held. It is this head and shoulder this was the catalyst for all of this that's happening right here. This was the indication of a reversal for all of this that's happening right here. And we're not going to sit back and say, oh, it is a degenerate move. Obviously, it is a degenerate move to sell it or buy a pullback. But it's a degenerate move when you try to, when you expect the weekly time frame or the daily time frame to respect your 4 hour or 1 hour pullbacks. Now you're just plain stupid. You see what I'm saying to you? So moving forward, right? On here we do not cost, so forgive me, right? So but moving forward, right, on the weekly time frame now we are bearish. Structural wise, we are what? Bearish. We broke structure right here, gave us a head and shoulder. We are melting all the way to the downside. On the daily time frame, we are also bearish. But for the weekly time frame, I need to understand something, right? We trade from zone to zone, right? We trade from what? From zone to zone, from one end to another. So right now we are expecting the DXY to make its way all the way to this end, right? We're expecting the DXY to make its way all the way toward this end, which is 90.000, 90, you see what I'm saying, 90,000. We're expecting it to get all the way to 90,000. You see what I'm saying to you? So is it possible? Yes. Would it could it bounce and reverse? Yes. You see what I'm saying to you? All of these things can happen. It may not get there, it may get there, but we have to be realistic. We are heading there. We have to be what? Realistic. We are on our way there. You see what I'm saying to you? So let us keep being realistic. Let us what? Keep, making our mind malleable to change. Right? So moving forward, right? So on the weekly time frame, we are bearish. Very important. It's important to know that we have broken and we've retested this important area of interest, because why? From zone to zone. From zone to zone. This zone may be a lot bigger, but it's still our zone. It's still our odd zone. So we're expecting to continue, the sales all the way to the downside. If you notice, right, this last week, this was formed and it looked like we're about to have a reversal. I thought we were about to have a reversal, but at the end of the day, the market tells us what to do, right? The market tells us what to do. So now if you look, you can see that all we did was retest this last lower high, and then also retest a very important Fibonacci area. It's what I'm saying to you. So with this market structure, with the market structure and with the tools provided for us, we're able to make a calculated decision and say, okay, right, we may continue to be bearish, right? We may continue to sell, and then the euro dollar and the GBP will continue to buy, right? So moving forward, on the daily time frame, we are bullish. Yes, we are bullish. We are bullish. But it is important for us to be able to catch the reversal as it's happening. The daily time frame is not stronger than the weekly time frame. The weekly time frame is not stronger than the monthly time frame. You see what I'm saying to you? So we are getting our information from the weekly time frame right now. We are expecting to continue to sell. Yes, there is a head and shoulder here, but it is a failed head and shoulder because we are not bouncing off of it. We are not respecting it. You see what I'm saying? So you are coming off of this Fibonacci area. It is important to go to the higher time frame. If the daily time frame looks noisy, right? You go to the weekly time frame. See, it is important because the higher time frames, they simplify the market. They reduce the noise. They reduce the market structure. They make it easier to understand. They make it easier to read and to make decisions off of, right? So on the daily time frame, we're expecting this. We're expecting to what? Catch this reversal. We're expecting to what? Ride this reversal. You see what I'm saying? We're expecting to what? Catch this reversal. So there's a trend line that we have to put in place right now. So you need to understand this, right? Now, the moment we break this counter trend line, we're expecting the market to fall. You see what I'm saying to you? It's falling already, right? Because you can see this bearish engulfing looks very good. This is basically a candlestick pattern. This is an evening star. It looks good, right? So we're expecting the market to continue to melt all the way to the downside. Now, on the 4 hour time frame, obviously we're not trading. I don't trade the DXY, right? But it is basically another pair for confluence. So I need now. I'm going to say this, right? To use pairs for confluences, you need to use the higher time frame, right? Use the high time frame. So it's important to you have to read the same way we're using the DXY for confluences. In the same way we have to only use the higher time frame for confluences. If you go and say, all right, boom, I'm going to be buying, placing a buy on Euro USD but Euro USD is supposed to move opposite to the to USD card, and USD card is giving me buy signals already. You're gonna have a conflict of interest. It's something to your emotions are gonna play with you, your mind is gonna play with you, but you have to go to the higher time frame. If you go to the higher time frame on Euro USD card, you will see that it's bearish. You see what I'm saying to you? But the daily, the buys may be a mid-term pullback. You see what I'm saying to you? So it's important to know these things, right? So moving forward, right? This is where we're gonna stop. We're gonna stop. We're not gonna go in the 4 hour or the 1 hour because we're not expecting entries. We're expecting to know where it's headed, right? We're expecting to know where it's headed. So we're expecting to continue to sell, meaning when we go to the Euro USD to GPSD, we're looking for buys. We're looking for buys, right? So we do that right now. Let's go to the GPSD. So GPSD. So GPSD top line analysis. Now there's something I want to say, right? If you remember, I just talked about being realistic. I just talked about saying taking the market for what it is, right? Taking the market for what it is. On GBP we are bullish on the monthly time frame. This is the most beautiful thing that will ever happen. The monthly time frame is now trending in the opposite direction of the DXY. It is beautiful. Now I'm not talking about a midterm reversal. I am talking about a full blown, trend. A full blown trend. The monthly time frame is bullish because we've broken this structure and we came to retest the left shoulder. This is a complete head and shoulder because why? We've come to retest the left shoulder, and it is also not a complete head and shoulder. Sorry, it is not a complete head and shoulder until we break the neckline. But we're expecting it to happen. So when we break this neckline, we're expecting to continue all the way to this zone. So from zone to zone, right? And I'm moving forward to on the weekly time frame. Now we've established that we are bullish on the monthly time frame. We take that ideology and keep it in our pockets. We keep it in our pockets, right? We take it. You remember in high school where you say put zero, carry one. Now let's put that. Let's carry that. Let's carry the idea of the monthly time frame being being bullish. Let's keep it in our pockets, right? Now on the weekly time frame, it is structural wise we are bearish, but we can see that coming off of this area of interest right here, we have a bullish engulfing. Now there's something called catching the reversal. There's something to you. This is a style of entry. You have to be able to catch a reversal before it happens. You see what I'm saying to you? But you must have a trend in mind. You cannot just catch any reversal. You must have a trend in mind. So we are expecting a reversal on the weekly time frame. First signal of a reversal is a bullish engulfing. Oh, it looks good, right? Looks really, really good. Now, on the daily time frame, this is where we look for the trend. This is where we look to enter. This is where we look for areas of interest. Sorry, this is where we look for areas of interest to be able to ride the most immediate trend. The most immediate trend right now is for us to continue to buy. You see what I'm saying to you? For us to continue to buy, we have a trend line right here. We have a trend line right here. So now it's important to know that the moment we break this counter trend line, we will be retesting it, maybe on the daily time frame as well. You see what I'm saying to you? This counter trend line is there because we may also want to retest it. Now you need to understand that the more you teach people, the more you explain something, the more you understand it. When I was analyzing the markets by myself before I came on here, I did not even check for a counter trend line. You see what I'm saying to you? But now I am checking for it. You see what I'm saying to you? So it's important to know this as a person, right? Don't just keep information for yourself, but the more you speak on it, the more you explain to people, the more you understand, right? So moving forward, now we're looking for a break of this scatter trend line, a poke out and then a retest. But if you're willing to be be aggressive like myself, I will be expecting a retest of this level. It's something to I'll be expecting a retest of this level, this area of interest right here, this round psychological 1.34000. Expecting a retest. If you can see we are shy off of it, we haven't touched it. It's very important for me to touch. It's something to so by the time the market touches this area of interest, I will be looking for buys all the way to the upside, right? And that's so we'll look for buys 1 minute. We'll look for buys all the way to the upside. Look for buys all the way to the upside. So, yeah, that's that for you for GPSD, and and this will be the next level. This will be our next psychological right here. So the next pair right now is Euro USD. Now, if you notice, we are trading the opposite direction of the DXY. It's very important to know. We're trading the opposite direction of the DXY. So on Euro USD, excuse me, on Euro USD, it's basically the DXY turned upside down. We're having a midterm reversal. We're looking to continue to the upside. You see what I'm saying to you? On the weekly time frame, we're looking good, we're looking bullish. We're looking bullish. The structure is looking bullish. You know what I'm saying? It's something to you. The structure is looking bullish. We haven't broken this structure right here. We're looking bullish. We're looking to continue to buy, right? On the daily time frame, we're looking to catch this reversal. It's not saying to this is basically a failed head and shoulder. You refuse to break. You refuse to break to the downside. This is basically a failed head and shoulder. So on the daily time frame, we're looking to continue to buy. So we will be expecting a retest on the 4 hour. Expecting a retest on the. I wait for my retest on the 4 hour, right? So yeah, that's something I do. I wait for retest on the 4 hour for break of counter lines. If I want to execute after the market has gone far, I wait for retest on the 1 hour. Little things, right? And now, we've already retested. We've already tapped the area of interest. All I have to do right now is to wait for a break of that trend and then I execute. That's all I have to do. That's all I have to do. You know what I'm saying to you? All you have to do right now is wait for the break of the counter trend line and then we execute. And that's it. That's all. And then my first take profit. This is my thought process entering the trade, right? So I'm gonna share the secret, right? So the same way I would, use the same way I would use the past consolidation to know how much I should be expecting the market to consolidate for. The same I'm saying to you, the same way I would use the past impulse to know where the market will get to before it starts to retrace. You see what I'm saying to you? So it's very important to know this. And then my first TP would be right here. This is where my first TP will be. And if you notice, the first TP is also in confluence with this area, the past. It's not to so in the market, all we have is the past. That's all I'm gonna say. With trading, all you have is the past. It's what I'm saying to you. If you see, if you know, you see what I'm saying to you. So you see how uniform it is. Look to the left, looks really good. You see what I'm saying to you. In trading, all you have is the past. You have nothing but the past in trading. So with the past, you're able to formulate a plan. With the past, you're able to formulate an idea of what could happen, what might happen, and when those things happen, you're able to take action. Now you see, this is my thought process. I need a break of counter trend line, and when that happens, I will be executing, and this will be my first take profit. I'll take out majority and let the rest run all the way to here. That's what I'm saying to you, and that's my thought process, and that's it. We trade from zone to zone. We trade from the higher time frames. We don't trade from the lower time frames. That's what I'm saying to you. Sorry, when I mean trade, I mean we make our analysis off of the higher time frame, so we are able to swing for a long time without adding more risk, adding unnecessary risk, adding unnecessary entries. That's what I'm saying to you. I could take 1, 2 trades and then let the rest run. Simple. That's what I'm saying. So that's the end of this video, and I hope and I pray that you follow your trading plan. It's very important. All we have is our trading plan. That's all we have. That's the only thing we have to beat the market with. Your trading plan should entail risk management, proper risk management, right? So and proper entry criteria, tested entry criteria, right? So I pray that you lot follow your trading plan, get close to God, and He will definitely help you because everything is to His agenda, everything is to His purpose. So your money should not go to your selfish purpose, but to the purposes of the Lord, right? So have a great weekend. Have a great week. Ciao, ciao.